Recently, we have seen the pattern repetition, and because of the pattern repetition, the S&P 500 came into a heavy bullish condition. And because of that, there were very heavy chances that the S&P 500, number one, the S&P 500 may repeat the pattern in some manner. Number two, the closing of the S&P 500 by Friday will be above 6026. And also number three, if there comes any fall in the S&P 500, then that fall will be limited and that fall will be recoverable. And this was my previous S&P 500 weekly technical analysis. And you can clearly notice 6026, a closing was anticipated by Friday above 6026. Heavy bullish movement. On Monday, a gap up open. And by Friday, a green candle, a weekly green candle by Friday. What will happen to the S&P 500 in the coming week? Very simple. S&P 500 is now heading to the zone, the expected peak. This is the zone. This zone starts from 614x. And once it enters into the zone, then it will become unstable. So I will discuss all of this in detail in this S&P 500 weekly technical analysis. But before that, let me quickly give you a glimpse of what was anticipated, what was expected, what was predicted, and how the S&P 500 behaved in the entire week. On Monday, S&P 500 gave a gap up open and then it sustained at the 604x. However, on Monday itself, there was supposed to be a little fall up to 6026 in order to fulfill the condition through the daily charts. However, this condition was fulfilled only on Wednesday, February 12th. And overall, in a weekly manner, the S&P 500 was supposed to remain more bullish and less bearish. In my midweek update on Monday to my Patreon community members, I mentioned that for the rest of the day, S&P 500 is expected to trade in between the 604x and the 608x. That's it. And you can notice the low of the candle was 6045 and the high of the candle was 6073. Then on Tuesday, once again, the S&P 500 through the midday update to my Patreon community members, S&P 500 was expected to trade in between the 604x and 608x. So on Tuesday, once again, the low was 6041 or 42 and the high was 6076. Now, Wednesday was tricky because on Wednesday, the inflation data was released and the inflation data was very negative. That is why in my pre-market update before the open of the stock market on Wednesday, I mentioned this to my Patreon community members. If in the first hour S&P 500 managed to recover and to sustain above this small zone, in that case for the rest of the day it will remain in a condition to try for 604x and also the level in between 604x and 608x. So what we have seen here on Wednesday, the open was at 6025. It came down and its low was 6003. But within the first hour, it has recovered the zone. And because it has recovered the zone within the first hour, so this then cleared that for the rest of the around 5 or 6 hours, for the entire day, it will now sustain at the zone and it will be heading to 604x and then to the next level. And on Thursday, in my midday update to my Patreon community members, again because it has cleared, it was sustaining above the 604x. So it was very much clear that in the second half or for the rest of the day, a movement back to 604x, not much. Chances are not much. Means it will remain bullish or heavily bullish and it is not expected to come down. Even if it comes down, then it can lose at most to 607x. And then will retrace from 607x and will recover the 608x and 6100. So what we have seen on Thursday, open was 6061. It retraced, but it never tested the 604x. It moved up, it remained in that manner, and then it tested the 608x and 6100. If everything was good, then why there was a very limited movement? Why there was very little candle? Very simple. If you notice, the low of the candle was 6107 High of the candle was 6127. And in my midday update to my Patreon community members, I mentioned that there are very good chances that the S&P 500 can remain or sustain above 6106. 6106 was the trend line. Any bullish movement will be limited to 6128. What was 6128? 6128 was the high of this candle seen on 24th of January. So in this manner, the movement of the S&P 500 in the last week, in the previous week, was as anticipated, as expected, through these daily precise updates of the S&P 500 and the Dow Jones, which I give to my Patreon community members every day from Monday through Friday. Every day, Monday, Tuesday, Wednesday, Thursday, Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the agenda of this S&P 500 weekly technical analysis, and let me tell you that what I'm going to cover and how I'm going to cover. First point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart is very strong, very heavy bullish. Okay, weekly chart is the only chart which was supporting the bullish movement and a very limited fall. So I will show you through the technicals, through the moving averages and everything, that and through the candles, that why it is very heavily bullish and what will be the impact, of this the last weekly bullish candle in the next week. Weekly chart means the long term picture, okay, for a month or so. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart means the short term picture, okay, for a week or so. Now in the daily chart, you can clearly see first there was a pattern repetition, okay, and then this pattern was again repeated, okay, in some manner, and also S&P 500 sustained bullish and closed above 6026 on the by Friday, okay, and there was a green candle. And now also through the daily chart, because all of the technical indicators are absolute bullish, S&P 500 is 100% absolute bullish, and we are expecting more bullish movement or more bullish momentum. Okay. The third and the last point of the agenda is the probable movement of the S&P 500 from February 18th, which is Tuesday, February 21st, that will be Friday. February 17th is the holiday. Okay, so market will open on Tuesday, February 18th. Now, what is going to happen in the S&P 500 in the next week? Just like the previous S&P 500 weekly technical analysis, and also through my daily precise updates to my Patreon community members, I mentioned that any fall will be limited and there will be bullish movement. Bullish movement is allowed. Even if there comes any fall, it will be recoverable. But the bullish movement will also be limited to the zone, the expected peak. However, S&P 500 never hit the peak. Okay. So similarly, I will tell you in this, the last point of the agenda, how the S&P 500 is expected to behave or to trade. What will be the bullish conditions? What will be the bullish triggers? What will be the bearish triggers or bearish conditions in this, the third point of the agenda. Now guys, we are here and this is the weekly chart, and here I will discuss the first point of the agenda. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means one entire week. Okay. Weekly chart is the trend setter. Okay, a trend setter. As of now, the trend is bullish, clearly bullish. Okay, that is why whatever is happening from Monday through Friday, okay, 2 days it was a third day, there was a gap down open, then it recovered. Okay, some up down, up down. Okay, so now on this, the weekly chart, let's first discuss the candle, because the candles are very, very important. Now, before I discuss the candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates, daily precise analysis of the S&P 500, along with the levels, the zones, okay, everything from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, this candle is a heavy bullish candle. So there is no defined shape of the candle, but still I am saying a heavy bullish candle. So there is a reason, because the closing of this candle was 6114,114.63, and this is the first time S&P 500 has closed at this level, because last time on 21st of January S&P 500 closed at 6101. Okay, this time this closing is more than the previous closings, all of the previous closings. That is why it is very significant, and that is why it is considered, or it will be considered, as a heavy bullish candle, indicating more bullish movement, and also a possible gap up open on Tuesday. Okay, Monday will be the holiday, so on Tuesday a possible gap up open, or irrespective of any open, an initial or intraday bullish movement on Tuesday. Okay, now the weekly candle of the Dow Jones. This weekly candle of the Dow Jones is a very simple bullish candle, and also the closing of this candle is not above the closing of the previous candles. Okay, you can clearly notice here. And also this candle closed below my heavy resistance level, that was 446xx in the Dow Jones. Okay, whereas at the same time the closing of this S&P 500, this candle, okay, it was above 6100 and also above 6106, which was the trend line. And when I will discuss the daily chart, I will show you that there were two consecutive closings above the trend line. That is why it is a bullish breakout condition in the S&P 500. However, this condition is not seen in the Dow Jones. So Dow Jones does not confirm any gap up open. No, Dow Jones simply confirms the continuation of the bullish movement. It also does not confirm any intraday or initial bullish movement. No, it simply confirms the continuation of the bullish movement. That's it, nothing else. Okay, so this was through the candles, and now let's quickly analyze the technicals to see how much bullish these indices are to or on these weekly charts. So on this the weekly chart, what you will notice is that S&P 500 is clearly bullish through the Bollinger Bands and the moving averages. There is a clear fan out through the moving averages, bullish through the Ichimoku cloud, and the S&P 500 is further okay. The problem is still there. However, see, until last week it was acting as the blessing. It was the problem as well as the blessing, and I've discussed this, okay, again and again, because there was heavy divergence. Because of this heavy divergence, there was the natural bullish support to the S&P 500. That is why I mentioned highly likely there will be a weekly green candle and the closing will be above 6026 by the end of Friday. But now this blessing is not going to work anymore in favor of the S&P 500 as such, because the MACD has started to converse. Okay, so but now the MACD is bearish, it will remain bearish. Okay, and that is why S&P 500 is bearish through the MACD. One more problem, well, this was not supposed to happen, but now it has happened. This is the bearish crossover in the stochastic RSI, and this is not good. This is really not good, because this bearish crossover in the stochastic RSI at the same time when the MACD is also bearish indicates the bearish momentum in the market. Bearish momentum in the market means now the market is going to see pressure. It will see pressure unless there comes heavy bullish candle by the end of Friday. The market will see heavy bearish pressure. Okay, and now it becomes more important because now it is heading to the zone, the expected peak which starts from 614x. Okay, that is the expected peak. So now that it is heading to the zone, so this bearish pressure becomes more important, because when the S&P 500 reaches to the expected peak, the zone, and at the same time stochastic RSI is bearish, MACD is bearish, there is already bearish momentum, bearish pressure, it has hit the zone, It is now struggling. This means a sharp or sudden fall or a heavy fall in the market. Okay, that is why I'm saying that the blessing is not going to work anymore for the S&P 500. So this the bearish crossover in the S&P 500, the stochastic RSI, is not good. This is now the S&P 500 will be seen only 60%, 60% or 70% at most, maximum 70% bullish. Okay, on the weekly chart. Now the Dow Jones. So once again, the purpose of analyzing the Dow Jones is to get this clarity whether the S&P 500 will be able to sustain or not, whether whatever we are seeing in the S&P 500 is absolutely true or not. Okay, so Dow Jones will validate that. Dow Jones is bullish through the Bollinger Bands, through the moving averages, clear fan out, through the Ichimoku cloud, it is bullish. Other than that, it is okay. So this is now, it has now become very special because see, MACD is bearish, clearly bearish. Okay, and there is no blessing, only problem but no blessing. The stochastic RSI of the Dow Jones is still bullish. The stochastic RSI of the Dow Jones is still bullish. Okay, this means that the MACD and Dow Jones are MACD and the stochastic RSI are opposing each other. They are not supporting each other, they are opposing each other. Okay, this means that the heavy fall that was anticipated, okay, or the heavy bearishness, heavy momentum, bearish momentum which was anticipated through the S&P 500 is not present in the Dow Jones as such. That is why the Dow Jones is still 80% bullish, not 70, not 75, but 80% bullish on the weekly chart. This means that the S&P 500 will be under pressure, will remain under pressure, but can sustain and can try for the zone again and again because of the Dow Jones, through the help of the Dow Jones. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday. Monday, Tuesday, Wednesday, Thursday, Friday, every day. Pre-market update. Pre-market update is given 1 or 2 hours before the open of the stock market. Midday update. Midday update is given after 3 hours. Then the final update is given 1 or 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of everything, what is happening, what is going to happen, what will be the implications of this movement or that movement. And I share the precise levels, the precise zones, and the S&P 500 and Dow Jones respect these the levels and the zones. And that is not all, because I also give the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market, top 30 or 40 companies of the US stock market. And that's not all, because I also give this the mid-week update. Mid-week update is generally given on Wednesday or Thursday, and this is a video technical analysis just like this weekly technical analysis. But this video technical analysis is very, very precise in a manner that I discuss the levels, zones, and precise movement, what is going to happen on Wednesday, Thursday, and Friday in very, very detail. So guys, if you are also looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will see 3 levels or 3 tiers, 1, 2, and 3. This is the 3rd tier that I have recently introduced. So the difference between these 2 tiers is only the geographical location. So when you subscribe to any of these 2 tiers, then you will be getting all midweek update videos every Wednesday, Thursday with daily precise levels, zones, everything. And the daily SP500 analysis, updates, movement, levels, zones, and the stock market opportunities minimum 5 to 10 every week. When you join this tier or when you subscribe to this level or this tier, then you will be getting whatever you are going to get here. You will be getting everything here. Other than that, I will also tell you there will be a session, a one-on-one session of 2 to 3 hours. And in this session, Okay, it will be just me and you, and I will tell you, I will give you the secrets of the entry and exit, when to enter, when to exit, when to gain maximum, okay, when to book your profits, these things. Other than that, one premium hack. This hack will work approx 100% accuracy and will work almost 100% of the times. And through this hack, you can make anything more than 5%. Other than this one premium hack, this is one trading and options strategy. So I will tell you one options strategy or one trading strategy, and this strategy is very accurate, like accuracy is almost 100%, and it works almost 100% of the times, just like the hack. Other than that, I will also give you the modified technical indicators. See, I am using the modified technical indicators, and because of these modified technical indicators, I am able to predict the movement even before it is seen. And when you will use these technical indicators along with the hacks and the trading strategy, then you will feel very confident, because you will know that where exactly to enter, where exactly to exit, how much profit or how much movement you are going to see. Then comes the options premium calculator. I will teach you how to calculate the premium value of any options within 30 seconds to 1 minute. So this is why this particular tier or this particular level is very informative and contains a lot of features which will help you trade every day, every week, every month, every time, confidently, carefully. However, if you want to learn the hacks, the modified technicals, the options as a separate course, or through a separate program, then you can visit my shop section on my Patreon page, on my Patreon profile. And in this, the shop section, you will find everything, you will see everything. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday. And they know that what is going to happen, why that is happening, what will be the implications, what will happen next. And they are very well prepared for everything. So guys, whenever you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the second point of the agenda, and here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Now let's first discuss the candle. This candle is very small, very thin red candle, and there is no defined shape of the candle. That is why we will look into the other factors. Other factors means there was a trend line. Okay, it closed above the trend line, number one. The candle before this candle was a very heavy bullish candle, closed above the trend line, number two. Okay, all of this indicates a bullish breakout condition. Bullish breakout means a heavy bullish movement is expected to be there or is expected to be seen in the market. That is a bullish breakout condition. This also means that on Tuesday we can expect a gap up open, or irrespective of any open and initial or intraday bullish movement. Now this is the Dow Jones. Daily chart of the Dow Jones. This is the last candle of the Dow Jones. Okay, it's a heavy bearish candle or good bearish candle. Okay, there is nothing bullish in this candle, but when this candle is seen through the technicals, then definitely it is bullish. Otherwise, a candle itself is not bullish, it is simply bearish. But so there is no gap up open defined. Okay, initial or intraday bullish movement is not defined. Okay, however, some pressure is expected, but because the candle closed above the 44.5xx support level and also above the moving average, this means that any pressure will be limited. This means that overall there is no problem to the market as such. Now let's analyze the technicals. But guys, before that, so far, if you have liked this video, then in order to appreciate, hit like. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500, every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, clear fan out in the moving averages, S&P 500 is bullish on the daily chart. Through the Bollinger Bands, S&P 500 is bullish. Through the Ichimoku Cloud, S&P 500 is bullish. Through the MACD, S&P 500 is bullish. Through the stochastic RSI, S&P 500 is bullish. Stochastic RSI has not yet hit the saturation. Okay. All of this indicates that the S&P 500 on the daily chart is 100% absolute bullish. Absolute bullish. On this day, on Wednesday, the MACD turned bearish. Okay. However, the next day, heavy gap up open and then heavy more than 1% movement, it managed to recover. Okay, this the 1 day change in the MACD, and since then it is heavily bullish. Okay, S&P 500 is heavily bullish, indicating more bullish movement or the continuation of the bullish movement. Now comes the Dow Jones. Dow Jones clear fan out in the moving averages. Through the Bollinger Bands, it is bullish. Ichimoku Cloud, it is bullish. The problem in the Dow Jones, just like what we have seen on the weekly chart, MACD is bearish, stochastic RSI is bearish, okay, on the daily chart. So what it indicates, okay, so first of all, what this indicates is that on the daily chart, the Dow Jones is 60% or 70% bullish. But what is not good for the Dow Jones or for the market is that the MACD is bearish and the stochastic RSI is bearish on the daily chart. So this will put pressure on the entire market, including the S&P 500. This means that although there is a bullish breakout in the S&P 500, okay, this bullish breakout in the S&P 500, this bullish breakout might not be realized in terms of the movement and the numbers, because the Dow Jones on the daily chart is bearish, MACD and the stochastic RSI are bearish. It will put the pressure on the entire market. Other than that, on the weekly chart, the S&P 500, the MACD and the stochastic RSI are both bearish, just like what we have seen on the daily chart of the Dow Jones. This means that the chart of the S&P 500, the weekly chart of the S&P 500 will put the pressure on the S&P 500 itself. That is why once again the real bullish breakout, see, whenever there comes a bullish breakout, we can expect 5% movement. 5% movement in that side, in this case 5% movement. However, because of this unusual combination on the weekly chart and on the daily chart of the S&P 500, okay, this the 5%, 4%, this cannot be, or this may not be realized. That is why there comes the zone in the picture, this zone which starts from 614x. Now when this zone starts from 614x and S&P 500 has the power, has the potential to move up, then the S&P 500 is expected to get stuck, S-T-U-C-K, to get stuck in the zone. That is why I am saying that now there will be two most likely outcome. Okay, either it will hit the zone, struggle and will fail, or it will hit the zone, will sustain at the zone, will keep on sustaining in the consolidation. Okay, so well, this I will clear in the next point of the agenda, that is the probable movement. But for now, what you need to understand is that because of this unusual combination, although S&P 500 is absolute bullish, it is allowed to move up, is in the bullish breakout condition. But the actual bullish breakout, okay, this the heavy bullish movement may not be realized, because now comes the zone, and at the same time MACD and the stochastic RSI are bearish, will put the bearish pressure on the S&P 500. And because the Dow Jones is already trading, okay, in this manner, okay, like weak bullish manner, okay, that is why if there comes a closing below this moving average in the Dow Jones, then this will put more pressure on the S&P 500. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, every day. Pre-market update. Pre-market update is given 1 or 2 hours before the open of the stock market. Midday update. Midday update is given after 3 hours. Then the final update. Final update is given 1 or 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of everything, what is happening, what is going to happen, what will be the implications of this movement or that movement. And I share the precise levels, the precise zones, and the S&P 500 and Dow Jones respect these the levels and the zones. And that is not all, because I also give the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market, top 30 or 40 companies of the US stock market. And that's not all, because I also give this the mid-week update. Mid-week update is generally given on Wednesday or Thursday, and this is a video technical analysis just like this weekly technical analysis. But this video technical analysis is very precise in a manner that I discuss the levels, zones, and precise movement, what is going to happen on Wednesday, Thursday, and Friday in very detail. So guys, if you are also looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will see 3 levels or 3 tiers, 1, 2, and 3. This is the 3rd tier that I have recently introduced. So the difference between these 2 tiers is only the geographical location. So when you subscribe to any of these 2 tiers, then you will be getting all midweek update videos every Wednesday, Thursday with daily precise levels, zones, everything. And the daily SP500 analysis, updates, movement, levels, zones, and the stock market opportunities minimum 5 to 10 every week. When you join this tier or when you subscribe to this level or this tier, then you will be getting whatever you are going to get here. You will be getting everything here. Other than that, I will also tell you there will be a session, a one-on-one session of 2 to 3 hours. And in this session, okay, it will be just me and you, and I will tell you, I will give you the secrets of the entry and exit, when to enter, when to exit, when to gain maximum, okay, when to book your profits, these things. Other than that, one premium hack. This hack will work approx 100% accuracy and will work almost 100% of the times. And through this hack, you can make anything more than 5%. Other than this one premium hack, this is one trading and options strategy. So I will tell you one options strategy or one trading strategy, and this strategy is very accurate, like accuracy is almost 100%, and it works almost 100% of the times, just like the hack. Other than that, I will also give you the modified technical indicators. See, I am using the modified technical indicators, and because of these modified technical indicators, I am able to predict the movement even before it is seen. And when you will use these technical indicators along with the hacks and the trading strategy, then you will feel very confident, because you will know that where exactly to enter, where exactly to exit, how much profit or how much movement you are going to see. Then comes the options premium calculator. I will teach you how to calculate the premium value of any options within 30 seconds to 1 minute. So this is why this particular tier or this particular level is very informative and contains a lot of features which will help you trade every day, every week, every month, every time, confidently, carefully. However, if you want to learn the hacks, the modified technicals, the options as a separate course or through a separate program, then you can visit my shop section on my Patreon page, on my Patreon profile. And in the shop section, you will find everything, you will see everything. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, and they know that what is going to happen, why that is happening, what will be the implications, what will happen next, and they are very well prepared for everything. So guys, whenever you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones, and in a manner to the entire market, that what is going to happen in the entire market in the next week from February 18th, which is Tuesday, through February 21st, that will be Friday. So before that, if you have not watched the weekly chart section and the daily chart section, okay, in that case I will recommend you to watch the weekly chart and the daily chart section, that why we are anticipating a bullish movement, but a limited bullish movement, even though there is the bullish breakout condition, okay, through the MACD and the stochastic RSI and the candles themselves, and also why we are anticipating a gap up open. Okay, so it is very much clear in the weekly and the daily chart section. Now, in terms of the movement here, but before that, next week on Wednesday, the FOMC minutes of the meetings will be released at 2 p.m. Eastern time on Wednesday. And also this time the minutes of the meetings will be released with the SEPs, the projections. Okay, that is why this time this FOMC minutes of the meetings on Wednesday, okay, will influence or will impact the movement of the market heavily, because through the SEPs the market will come to know whether there is any deviation in the GDP forecast or in the rate cuts, okay, or in the unemployment, okay, or so. If the numbers are seen bad, in that case market will come down heavily, because market has already reached to the point where it is expected to hit the peak, and by Monday and Tuesday, if all goes well, then it will hit the peak, okay, and then bad data means down. And if there comes good data or supportive data, in that case it will try to sustain at the zone, okay, means chances for the consolidation. Okay, now in terms of the numbers, but guys, before that, so far if you have liked this video, then hit like in order to show your appreciation. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now what we know is that there is a trend line in the S&P 500, and the S&P 500 managed to close above the trend line on Thursday and Friday. And the most important part is that on Friday the low was 6107, and in my midday update to my Patreon community members, I mentioned that for the rest of the day it can sustain above 6106. So that is why the S&P 500 is in the bullish breakout condition. Okay, bullish breakout condition. Now this bullish breakout condition should technically compel the S&P 500 to move up heavily, okay, back to back green candles. But because of that, the bearish combination on the weekly chart of the S&P 500 and the bearish combination on the daily chart of the Dow Jones, this bullish breakout may not be realized, because now when the S&P 500 will try to move up, so at first it will have to breach and clear the high of this candle that was a previous all-time high, that was 6128. So at first it will have to breach. I'm not saying close or so, I am saying breach. It must breach 6128. Yesterday on Friday it failed. The high was 6127 only. Okay, that is why it was clear that it will remain in between 6106 and 6128. Okay, neither up nor down. Now, so at first it will have to breach the previous all-time high of this candle so that it can move up. Now it will be moving up to what? It will be moving up to the zone, the expected peak, 614x. This peak starts from 614x. There is actually a zone. Okay, this zone starts from 614x. If on Tuesday, as we are anticipating a gap up open on Tuesday, gap up open on Tuesday, or irrespective of any open and initial or intraday bullish movement on Tuesday. So first there must come an open above the trend line. Okay, above the trend line means once again above 6106 there must come an open. Okay, whether it will be a gap down open, gap up open, doesn't matter, but it must be seen above 6106 open on Tuesday. Once it gives an open above 6106, then it will be an initial bullish sign, that market want to remain bullish, want to sustain bullish. After open, when it will try to move up, then it will face 6128. 6128 is the all-time high of the S&P 500. Once there comes a breach, then it will open the door to the expected peak, the zone. Okay, this is the expected peak. Now, when it enters into the zone, then it will be highly subjective, to many of the things, including the technicals, including what is happening to the MACD and the stochastic RSI. Because so when I say highly subjective, I am saying highly subjective for the consolidation. Because as such, when it will enter into the zone, then it will feel uncomfortable. Okay, it will see struggle, because this is the expected peak of the S&P 500 we are expecting for last many months. Okay, I think from October, since October, okay, I have started to mention this to my Patreon community members, that see, this will be the expected peak, there will be the expected peak here, but it never reached or never hit the expected peak. That is why when it reached to this the peak, then it will start to become highly uncomfortable. Okay, and now this is a zone. So now when it enters into the zone, so there are a lot of things that can happen to the S&P 500. Okay, however, what we will be looking for is whether it will sustain inside the zone, whether it will be able to sustain inside the zone, or will struggle and will remain below the zone, below the lower boundary of the zone. Because if it moves up, struggles and remains below the lower boundary of the zone, then this will be the rejection, and just one rejection can trigger heavy fall. Because on the weekly chart there is a bearish combination, on the daily chart in the Dow Jones there is a bearish combination. Now this fall may be triggered either intraday, okay, or the next day or the next to next day, because if it managed to sustain, okay, intraday for that day when it hit the zone, the next day it will depend on the open, where the S&P 500 is going to get the open. Okay, and then the next to next day, because then open will be very important, because it will be actually the open that can trigger this the fall, not the other movement. Okay, however, if the S&P 500 sustains inside the zone, closes inside the zone, okay, then what will happen? Then it will open a possibility for the consolidation. Now what is consolidation? So if you have subscribed to my YouTube channel for last many months, years, or if you are my Patreon community members for last months or years, then repeatedly I have discussed the definition of the consolidation or the movement. Consolidation means, okay, the S&P 500 will oscillate. It will oscillate between two levels. Okay, and in a very rare case, it oscillates between two zones, two small zones. Okay, otherwise it oscillates up, down, up, down, up, down, up, down between two levels. Okay, oscillation, consolidation. This is clear. Now question is, what about a breach of the zone? Well, first of all, the breach of the zone, okay, it is not expected as such. A breach is not expected as such. Okay, even if there comes a little breach, but this little breach can happen only if the S&P 500 comes into the consolidation, because only in the consolidation S&P 500 is allowed to give a little breach in the bull or the bearish side. However, eventually it will close inside the zone. The closing will always be inside the zone. Okay, there may come a little breach. Okay, so that's not a problem, but closing will be inside the zone. Okay, if the breach happens, then most likely it is going to consolidate. Now there is one more question, okay, or there is one more thing very important. What if the S&P 500 actually breaches, sustains and closes above the zone, the chances will be less than 5%. Now why and how this can happen? So after, if this kind of situation is seen less than 5%, if this is seen in actual, okay, first of all this will be happening because, not because of the technicals themselves. Technicals now are not in that condition. It will be happening either through some data, exceptional data of some kind, or some geopolitical situation, means something is improving or something has improved significantly, okay, like overnight, okay, within a day or overnight or within a day or two, geopolitically, okay, means there will be nothing technical here, no technical, but only the non-technical things, only and only the non-technical things can make this happen, otherwise not. Technical, it is not allowed, okay. And if less than 5% chances, if this happens, okay, I'm not saying it will happen or it can happen, no, I'm saying if this happens, if this happens, if the S&P 500 moves up, okay, and sustains and closes above the zone, okay, then in that case we will be needing 3 consecutive closings above the zone, 3 closings, not less than 3 closings, because only when there comes 3 closings it will indicate that the market has really in a position to move up, and then there will be the second peak, the second calculated peak, okay, that will then come into the picture in next few days. So there are only these 2 peaks which are known, okay, but this peak is very strong, very strong, this peak, okay, which starts from 614x. This peak is very strong, okay, and then less than 5% chances, then that will be the second peak, and for now only these 2 peaks are known. When I say the peak, I mean the high of the season, okay, before the market actually enters into the correction, okay, or the recession, okay, that is expected to be the high of the season. So this was all about the bullish side, okay. Now the bearish side. So bearish side, because it is heavily bullish, this means that the bearish side is expected to be limited. Means if the S&P 500 fails to hold and sustain at the trend line, okay, at the same time Dow Jones remains below the trend line, okay, in that case the market will come under pressure. One more thing, it is regarding that the same bullish. If the S&P 500 moves up, okay, is trying for the zone, but the Dow Jones is under pressure and Dow Jones is trading below the trend line, in that case means there will be less than 1% chance, that the S&P 500 will be able to breach or sustain above the zone, less than 1%, okay, because Dow Jones will not allow any bullish movement as such, and because Dow Jones is the prime index, okay, this means that S&P 500, Nasdaq cannot simply surpass the Dow Jones. They will have to follow the Dow Jones. On the bearish side, if the S&P 500 remains below the trend line and at the same time the Dow Jones remains below the trend line, or in terms of the numbers it remains below 44,6xx, my calculated resistance level, okay, in that case there will be the bearish movement, but the bearish movement will be limited. Bearish movement, any fall from here will be limited to 604x, okay. This is the 604x that will be able to handle any fall. But now when it comes down, then 60 will be able to handle any fall for a maximum of 1 or 2 days. Okay, not more than that. Because if the S&P 500 again try for the 604x, try to sustain at the 604x, there comes heavy selling, Dow Jones is giving red candles. In that case, after 1 or 2 days, the S&P 500 will have to lose 604x, and then it will come under pressure. It will come under pressure, and then there will be 593x. Then this 593x can handle the fall from 604x. Although in between there will be 2 more these support levels, but only 593x has the 3x has the potential to hold the fall and nothing else. And one more thing, if the rejection is seen from the peak, expected peak, In that case, this 604x, 593x, no. In that case, the market will then start to come down in a staircase format, in a staircase pattern. Okay, so it will be 604x, then it will be 603x, then it will be 587x, I guess, 6 or 7x. Okay, in this case, okay, in this the staircase format, okay, it will start to come down, and then it will be going for the correction or the recession, okay, as per the conditions, okay, in the economy, okay, or in the market. So what does this mean? This means that everything will remain good and exceptionally well, very bullish, as long as it is holding and sustaining above the trend line. Number one. Okay, above the trend line, everything is good, bullish, heavily bullish, very good, and will try for the zone again and again, the expected peak. Losing the trend line, okay, and also remember that closing. So if you're my Patreon community member or my YouTube subscriber for last many years, I always emphasize on the closing. Okay, I'm saying closing. This means that even if there comes a breach and then it recovers and closes above the trend line, okay, so that is bullish. Okay, no bearish as such, heavily bullish. If it closes, if it breaches, comes down and closes below the trend line, means bearish, no bullish. Okay, now in between the trend line and the 604x, the S&P 500 will remain bullish. Without any doubt, it will remain bullish, no problem as such. Okay, now when it loses the 604x, there comes two consecutive closings below the 604x, means now it is going bearish, the real bearish. Okay, and then the real bearish impact of the bearish MACD stochastic RSI on the weekly chart of the S&P 500 and the daily chart of the Dow Jones will be heavily realized. Okay, and then there will be fall, more fall. Okay, and if the S&P 500 has hit, tested and was rejected and now coming down, in that case it will be coming down, and then the chances of the revival will be very little, very limited, very little. But if it moves up and never test the zone, never test the expected peak, moves up, fails, comes down, then it will remain under the condition where it can revive. It can remain bullish. It will be coming down to 604x, sustain, hold, then recovery. But a rejection from the zone, no revival, chances of revival are not there, very limited, very little. Okay, no revival and then the fall. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 if you are my Patreon community member. And if you are not, then I have given the link in the description of the video and also in the comment section. You can follow the link, you can join my Patreon community, and you can trade confidently. So guys, once again, if you appreciate my work, then please hit like. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.